The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the January 11th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And, of course, if you're listening live right now, this is being recorded between 8 and 9 in the morning. But I'll make it pertinent to today's show, the afternoon show. And I just want to tell you that I'm absolutely grateful for your presence here. Now, you can give us a call, because I'd love to hear from you, at 877-927-6648, or you can send me an email, steve@tfnn.com. Of course, if it's between 1 and 2, don't send me an email because I can't really respond to your question, but I can on Monday. And in the Tiger's Den, well, just any ping will do. Of course, it would help if I actually posted a chart inside of the den out here for TigerTV. That would make things just a tad easier. So there we go. Voila. Just magical. In any event, let's go ahead and get this show kicked off here right now. As of 8:08 in the morning, Eastern Standard Time, we've got Dow Equity Futures Contracts trading down, futures contract, trading off 63 points. That's trading down 23,887. The NASDAQ is off 30. That's about 0.4% to the downside. ES is down 8, S&P Futures Contract. Russell 2000 is down about 6 points. If we take a look at what took place overnight, in Asia, it was green arrows across the board. When we take a look at the Shanghai, Hang Seng, and the Nikkei. The Nikkei was up nearly 1 full percentage point. She closed out at 20,359. We head over to Europe and just look at the DAX and the FTSE. They're both down. The DAX is off about 0.6% or 71 points. The FTSE is off by 18 points, about 0.25%. We take a look at what's going on in the metal, the precious metals market. Gold is up 550, trading at 12.93. Silver is up 8 pennies, trading at 15.72. Treasury bonds are up about 11 ticks. If we take a look at the 30-year, if we take a look at the 10-year note, that is up 6 ticks out there. U.S. dollar index off about 21 pennies. She's trading out at around 94.90. I've got a 10-minute delay on that, so it's going to be off just a tad. Of course, if you're listening at 1, it's way more than a 10-minute delay. Nothing really major going on in the currencies out there. Yesterday, the Dow finishing up 0.5%, up 122 points. So the first question, a couple of questions that have come in. Let's go to those. First one coming in from John in the Tiger's Den. And John in the Tiger's Den asked the following question. Could we take a look at the ES Mini support levels, which if broken would suggest that a decline to lower levels is underway? So there's a couple of different things that I'll provide. First, I'm going to answer that question. Then let's go back and take a look at so-called support levels out there. First, I'm not really looking necessarily for support levels to fail to suggest that we're moving to lower price. And what I mean by that is if we take a look at the ES Mini, and we're going to take a look at it on a daily time frame first, what I believe is unfolding out here is, let me just clean up the screen just a tad. What I believe is unfolding out here, John, is the ES Mini is going to go on and complete an A to B equals CD pattern to the upside. That's what it looks like right now at 8:10 in the morning. And if that's the case, just the one-to-one ratio of that C to D leg, the 1-to-1, A to B equals C to D, would take us into about the 26.44 level. Now, 26.44 is not the price level where that pattern has to complete, but it's where the 1-to-1 level. Here, if I put that A to B equals C to D up pattern, I've got the Gartley sell pattern that is on my screen right now. That's the green highlighted area. You'll see that 1-to-1 completes at about 26.44. However, price could go on and do the 1.272 or the 1.618. Those are 2,700 and 2,772. Those are definite possibilities out here. Now, the reason why I think that that is unfolding, let's come back here. Let me turn this off. The reason why I think that that is unfolding is because if we come back here, here being to this chart for the ES Mini, what we're going to see is, and today may be a telling day for you. So in one instance, I guess I can give you a support level. The first ones that we would take a look at would be the market profiles. And the ES Mini, let me just go ahead and expand this screen up. That way you're not trying to figure out which chart is it that Stevie's talking about. So Stevie's talking about this chart specifically. If at the close today, you see the ES Mini close over 25.85.50 is what we'll call it. Then what we have is we will have a second day in a row for price to close over resistance. Resistance being the top of the boxes. Now let me do this for you. In truly analyzing this, let's go ahead and can I do this? Yeah. Let me turn off the weekly profiles first. So here's the daily set of profiles, which is really what we're dealing with. And if price were to close back underneath that, then we say, what we can conclude is that resistance is holding here, sort of. But first, if price trades above that, that signals that Gartley sell pattern that we looked at in the 26.44, the A to B equals CD pattern, is the one that we would be watching. I don't know if it's really the daily. Today is the end of the week out here. So maybe what's more important for you and I to look at is the weekly set of profiles. And on a weekly set of profile base, now this is a daily time frame that I have here. I'll just set this to the week. That way we get everything kind of copacetic. So this would be a possible close above resistance from a weekly standpoint. And that number, John, is 25.67, 75. It says 88, but yeah, 75 would be the number. So if you're looking for a level that price has to close below today to suggest that the Gartley sell pattern is not the pattern that's unfolding here, I would say that would be the nut. Yeah, that would be the nut. If we take a look and we go ahead and we put the daily back on here, if we close in between, let me go back to this daily time frame chart. If we close in between the daily and the weekly set of profiles out here, it just stuck in this little trading range. So the pattern, it seems more likely the outcome is the head to higher price. The head to higher price. Power outage. Oh, at the office. Uh-oh. I wonder if I'm on. Hopefully I'm on. Should be back up in a moment. Anybody in the den see my charts? Okay, good. I am on. Okay, that's good. All right. So, good. Okay, great. So, John, that's what I'm first looking at. I know you wanted to focus on the ES, which we will, and we'll continue this when we come back from the breakout there. Because, look, folks, whether you're listening in at 8:14 in the morning or you're listening in at 1:14 in the afternoon, what we just talked about here, this will help you at the 1 o'clock time frame, the 4 o'clock time frame for sure as well. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Look, we're taping the show today. It's now 8:18 in the morning, but we're making the show pertinent to doesn't matter what time you listen to it. And the question that what we're doing is we're kind of ripping apart the ES Mini, the S&P futures contract. And look, folks, let me just be clear as to why I use the S&P futures contract. I do not like trading, especially when we are pattern recognition masters, experts, whatever you want to refer to it, with both hands tied behind my back. And if you're going to make your decisions just based on what the S&P cash did at 4 o'clock in the afternoon yesterday, that's what you're doing. You can either have 8 hours worth of information, or really 6.5 hours worth of, or you can have what basically amounts to a full day. If you're doing price discovery, you want the full day's worth of information out there. You don't have to trade the futures contracts. But if you're trading the equity markets, you better understand what's going on inside those markets, what took place overnight, what levels of support or resistance were broken, what patterns are unfolding out here. When we take a look at the ES Mini, this chart here shows the ES Mini and the Dow. And we took a look at levels of support. We looked at the profiles out there. We looked at where price, we have a price projection tool. That's the A to B equals CD pattern, brought to us by H.M. Gartley, then really brought to us, I will say, by LP, Larry Pesavento out there. And so that is what is a requirement of the Gartley sell pattern. So that's one thing that we're looking at potentially unfolding. The reason why we think, Stevie thinks, that price is headed up to those levels is because we have seen areas of resistance fail. If areas of resistance fail, where does price head to? The next likely completed pattern area. Well, additional levels of resistance that have failed yesterday, and so far this morning too, is just a simple trend line. So John, each of you out there, you can pull up the ES mini. You can do this, by the way, on the S&P cash and the Dow. Now I'll show you what that looks like as well. But just simply start from a simple trend line. You don't need to be a technician to do this. You just need to find the low of a swing point, which in this case here would be October 29th. That's on the ES mini. And then choose the low of the swing point from December 10th. Just draw a straight line from that, and that in essence is what I'll call a trend line resistance level. If price is able to get above that area, that tells you you have a change in trend. When you get above that level and you come back and retest it and reject it, you come back, you move, pull back, you test it, and then you move higher, then you say, boy, this really may be a change in trend. That is exactly what took place yesterday. So what has to take place today in order to say, hey, you know what, that was a false breakout? I would say the ES mini has to close below that line. So for those of you that have access to the equity futures contracts, that's what you would do. In the case of the Dow equity futures contract, it's really the same thing. You're using the low from the trading session of October 29th, and you're attaching that low, in essence, or a line to December 10th. You can see yesterday a test and rejection says we're headed to higher price out here. Now, in the case of the ES mini, it's trading right on, as we speak right now at 8:21 in the morning, right on its horizontal trading range boundary line at 25.87. We're at 25.85. Staying above that also says taking it to the next level out there. In the case of the Dow, its horizontal trading range level is at 24.259. I mentioned we could do the same thing with the S&P cash and the Dow. Here you see it. Now, its trend lines are going to be slightly different. Same swing points, but what we will see, well, yesterday really was the same thing for both. It was a test and rejection of that level, suggesting that price wants to move to higher price. Don't get caught up into the fact that the equity futures contracts are trading a bit lower right now. Don't do that out here. Instead, let's take a look at the active pattern. So that would be the second level, John, and everybody else out there. That would be the second level that I would be looking at today's close to see where price is trading in relationship to those levels. If price is trading above them, then it is continued game on inside the ES mini with price heading to the 26.44 area. Doesn't have to stop there. It doesn't. But that's what I would be looking for. Now, if we look for, I also recognize that if you look at a 5-hour time frame chart, very cognizant of that, and that's why we need to understand those areas of support out here, that if we look at a 5-hour time frame chart, we can also see that we are in potentially the 7th wave move. That occurred 4 bars ago. That occurred, what was that time? That was at 1700 hours is when price made it to that 7th wave move. Markets tend to move in the key of G. That's what G is on my phone. If you A, B, C, D, E, F, G, you get to number 7 out here. Now, if price takes that level out to the upside, so just look at that level, by the way, in the ES mini. I'll see if I can get that for you. But it's obviously the high that we've seen so far this week. That is at 25.9950. If price takes that out, you know, the old recycle or what we like to refer to as, hey, it just disregarded that 7th wave move and prices headed higher. So I would be watching that to the upside as well for a signal. We don't have to stop there. We can go take a look at what's going on a 2-hour time frame. And on a 2-hour time frame, we can see that it too made wave number 7 and price is moving higher, doing less relative energy out there. But price would need to close below. This is a 2-hour time frame chart. The current profile says that the sellers should be able to push price down to 25.65. Folks, we're trading at 25.87. This is 8:24 in the morning. If price goes down another 20 points, bears are going to think, this is it. Maybe it is it. But you need to break through a level of support to prove to Stevie's son that this is really it. We have wide price ranges these days. You can look at this 2-hour chart and see that yesterday. Why would today be any different out there? It's all going to be about the end of the day readings out here. The intraday stuff is nothing more than the football game that's going on, and one team intercepts it, the next team fumbles it, and there's no reason to think that that is going to stop here anytime soon. Here on the 60-minute chart, we can see that we've got kind of like this ceiling, this double top area, things of that sort. So that's what I see when I take a look at these meetings. There was a question about the NQ. There were 2 questions. One came in from Maria in the Tigers Den, I think it was, or somebody put in NQ as well. Peter in Park City, my apology. So Peter wanted to take a look at the NQ, and I had a email overnight from somebody who wanted to go short the NASDAQ. So when we take a look at the NQ, if we do the same type of a thing, same type of scenario, here's what we take a look at in the NQ. And you can see that it is trading right now into the top of its resistance level. The resistance level being the top of the weekly area. And Peter, that's at the 66.29 area. Price has not been able to get above that. It's the only equity futures contract where price has not been able to bust through or break above or close above the top of either a daily or a weekly profile. So that should say to us, something to think about. Well, if we go take a look at the NQ daily chart, let's pull that out here. Here's what we're going to see. It, too, has a possible Gartley sell pattern that is unfolding. And if we take a look at that, that's going to require an A to B equals CD to the upside. Here's what that pattern looks. Whoops, sorry about that. That pattern says, from a 1-to-1 basis, it has a bit higher to go, about 67.25. But Peter, what's interesting about this pattern, the daily chart for the NQ, is look at that green dashed line out there. That green dashed line from the trading session of December 14th. Let's see over the next coming days, Tuesday, Wednesday, Thursday, do we get to a time to mark setup, 9 count, that is below the high from the day of December 14th? Because that could be the bearish pattern setup here. Great. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Welcome back, folks. The show's being recorded between 8 and 9 this morning, so if you're listening, thanks so much. I'm trying to also make this show really pertinent for that time frame. And the first two segments, we were taking a look at the ES Mini and the NQ and understanding what their message was as of that specific time frame and the levels that price needed to close above or where price was likely targeting or close below to suggest that there is a pattern that is completed. Right now, what we have on my chart, or on my screen, the charts that I have on my screen, I'll get it out. It's early in the morning out here. We've got the Dow. And here what we're taking a look at is the Dow priced in dollars, euros, yen, and pounds. Why is that important? Because for you to spend your time thinking when you take a look at an instrument that it's all about you, what I mean by that is U.S. dollars, that's the U I'm referring to, you're wrong. You're dead wrong. If you're doing that, then what you're doing is you're trading or investing with your hands tied behind your back out there. We're in a one-world economy. And a one-world economy doesn't just mean that you stay contained within your walls. Think of it like this. One of the questions that comes in fairly frequently, especially with the emerging markets having been trashed in 2017, is now the time to buy. You realize if we were sitting over in those emerging markets, they're asking the exact same question, only slightly different. They're saying, should we be buying the international markets? Should we be buying the Dow? Let's look at it like this. Let's say you're sitting over in Europe right now where you got the yellow jackets. What do they call them? The yellow vests out there. But I much prefer they should have called themselves the yellow jackets because then they would have had a great jazz band with amazing tunes that they could have been playing, you know, during their rallies, so to speak, out there. But you've got a lot of unrest that you have going on over there. You got Euro issues. And if you're sitting over there, is your question, hey, should I be investing in the U.S. markets? Well, what you and I can do is just take a look at their screen because it's all about the return that they're getting on their capital. And when we take a look at what's going on in the UK, the Brexit mania stuff that's going on over there, do you realize that the Dow priced in pound sterling is trading above the 2017 close, is trading above the 2018 close? That is the chart on my right-hand screen out here. This is telling you and I that their capital is flowing into the U.S. Because you see, a key here is being able to first, when price is trading above the prior year's high and taking a look at, or close, I should say, it's not trading above the high out there, it's a positive. It's a positive for the market. If you take a look at what the Dow in euros is doing, that is panel number 2 from the left-hand side here, you're seeing we're trading right now. Right now, as we speak, in essence, we are trading right at about the close of last year, and just slightly above the 2017 close. This is telling you and I that capital is flowing here. This is telling us, telling me at least, that the capital is going to continue to flow into the U.S. As crazy as things might seem here, okay, with our politicians. And remember, politician means they should be thrown out of office. They're not. If they were one of your employees, both sides, that is, if they were your employees, would you put up with that nonsense? Really? You're the CEO? Would you put up with that nonsense? All of them. But that's neither here nor there. Our responsibility, yours and mine, is to try to understand where capital is flowing to. And capital continues to flow into the U.S. out here. So I just wanted to go ahead and be able to make that point. All right. The question that came, so hopefully, Peter, we're good with the NQ. What to be looking for next Tuesday, Wednesday, Thursday. Probably a better time to take a look at the price action at that stage, assuming that price continues to move up. Whether it's by large amounts or small amounts doesn't really matter. But understand the global flow of capital, folks. Mucho important out here. So there was a question that came in last night I mentioned, and it was about ticker symbol NGD. I believe that's new gold out here. If we take a look at it, NGD, yeah, new gold, just totally got trashed yesterday. Now, when I say trashed, let's put this in perspective. Trashed is it opened at $1.24 and closed at $1.11. Now, percentage-wise, that was pretty decent. Here's what it did yesterday. What it did was it formed a key reversal, bearish engulfing, the whole 9 yards, and the question was, where's a good entry price? So this is the daily time frame chart out here. And if we take a look at it, the retracement yesterday, the move lower and higher was really with light volume compared to the day before. So the question is, so what should you do? First of all, if we take a look at the monthly time frame chart, that's the very right-hand panel. One of the reasons that price may have pulled back like it did was because it also got up to a resistance area. That was the top of its monthly profile. Yes, it's January 11th. We're not anywhere near the end of the month. But traders and investors somehow knew that once you got up to about the $1.28, and yesterday's high was a $1.24 out there, that was resistance. If new gold during the month of January can close above the top of that profile, that's going to be short-term or intermediate term at least bullish out there. If you look at the weekly profile, even looking at yesterday's action on the weekly profile, price is well above it this week. Above what? The top of that box, 90 cents. If you're asking me where a great buy or a good buy on light volume pullback would be, I'd have to go with the 90-cent level. Now, maybe it doesn't get all the way back down to that 90-cent level. Maybe it's just some type of retracement of this first leg. Maybe what NGD is doing is just simply making an A to B equals CD to the upside pattern out there. And that would say a normal retracement would be a 61% retracement. And that level is 93 cents. So I apologize, because I don't recall who asked that question and sending the email yesterday, but I would say I would watch the 93-cent level to 90-cent area. I would be watching the volume, anything else that might be unfolding, because what you'd also want to do is take a look at what's going on inside the gold and silver complex. And in doing that, you certainly want to understand what gold is doing in terms of euros and yen and pound sterling. Pound sterling moving slightly lower. Yen moving sideways. Euros moving sideways. Dollars moving sideways. We can see that gold here, if you just take a look at this yellow rectangle, gold has been moving sideways for the most part since about the trading day of for all of 2019. We're in a range. That range is about 1280. At the downside, around 1297, 1300, we could call it, to the upside out here. It's not bearish. It's not bearish because we have price trading above the top of its profile. But I would also say it's not bullish. And the reason that it's not bullish, well, if I could find that chart, I would post it. But I don't see it. Oh, here we go. Here's the chart. And the reason it isn't, and I don't want to make today's show all about H.M. Gartley, but here's your Gartley sell pattern inside of the gold contract out here. And it has completed. And it completed back on January 4th when the bears arrived in town and they generated that key reversal bearish engulfing candle. So we can see from a buyers and sellers standpoint why they are struggling to get above that 1300 level. If we see price close above 1300, then it's game on. Then this would become a failed pattern and you would head to the next upside price target area. I don't have that on my screen right now, but right now, if you're trying to trade NGD based on yesterday, I would be watching what the mining, certainly what the mining index is doing, but certainly the precious metals as well. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Now about 9:42 in the 8:42 in the morning. This is when we're recording the show. So if you're listening live, thanks so much for doing that. At the moment, you've got the Dow Equity Futures contract trading down by about 77 points. It's about 0.3% to the downside. Pretty similar across the board for the other 3 equity futures contracts out here. Gold up about $6. Silver, excuse me, up about 7 pennies. Let's take a look at how some of the equities are moving in the pre-markets out here. Let's start with Tilray. TLRY is a ticker symbol. Closed last night at $80.40. In the pre-market, selling somewhere around $97.50 is the last trade that just fired out. So let's go take a look at it, get a feel for any pattern that we can find out here. Now, this is a daily time frame chart for Tilray. So at $97, an only set of profiles, because of the lack of data out here that we have, are going to be the daily time frame. So $97 is going to take it over resistance. By the way, resistance on this equity is going to be $80.92. If price closes over that, then what it looks like is Tilray is headed for the most recent swing point. That most recent swing point is at 109.19. That's the bottom of that swing. Let's go ahead and put the volume out here. Let's do this. Let's see what kind of volume, so you can measure that today. The volume on Tilray at that high, November 7th, was about 9.8 million shares. I'm not saying that it's going to hit that level today. I don't know if it will or it won't. I'm saying that's where it's targeting. If it's moving into 109.19, doing it with more than 9.8 million shares, then that suggests to you and I that price is going to go up to the high of that swing area. That high inside of Tilray, 142.84. Not too bad, considering it was at $80 yesterday. That's like a 75-80% move. So right now, what we know in the pre-market, it's trading higher. I don't know what it's going to do at the end of the trading session, but right now, trading above resistance. And again, that resistance level, that resistance level is $80.20. Hold on a minute here. Sorry, is $80.92. Suggest that Tilray headed to about the 109 level. Also moving to the upside, you've got Netflix. Netflix closed at $324. It's up about $6 right now, trading at $330. We go take a look at Netflix, try to get a feel for what it is doing. It's got a pattern that suggests that where Netflix wants to head to is about the 374 level. 374.24 is the top of that profile. This is a bearish structured profile. So if today we see a move, a close above 325.28, preferably by more than just a few pennies or a dollar or two, then that would suggest to you and I that price is headed back into the 374 level. That's what we see at Netflix as of 8:45 a.m. Also moving to the upside, let's see, what do we have out here? Flowtech Industries, FTK. Here's a penny-ish type of stock, close at 141. Not too bad. It's trading at 294. So that's a big move out here. So what does 294 do for us? 294, that's quite a move out here. 294, it looks like, is going to get us back into a level where there was a downdraft. Let's go measure where that is. So here's the resistance level inside of this equity, FTK. It's at 263. So it looks like it's going to open up into that gap. The top of that gap, wow, is 289. I don't know where this is going to open and where this thing is going to close and where it's going to trade intraday. But if this is able to trade above, I don't know what this company even does, Flowtech Industries, but if it does open above 263, stay above 263, it's going to have one heck of an island bottom reversal pattern on it. So watch this. Go back and take a look at this chart during the day. FTK, and by the way, an island bottom pattern is a very bullish pattern inside the market. You know how most people say that the bull market that we're in began in March of 2009? Have you ever heard anybody say that? I say they're wrong. I say they're dead wrong. This bull market began in 1974. And you know what it began with in the S&P 500? An island bottom reversal pattern. Yeah. Go back and take a look at it. That gap has never been filled. That gap will never, ever be filled out there. That's when the bull market began, this bull market that we're in right now. Yeah, 1974, nice island bottom. In bull markets, you have corrections. In bull markets, those corrections can also be what they refer to as bear markets. Those are just larger corrections. You and I cannot sit here and take a look at an equity and take a look at between swing points and say something's going to move 61%, and then somehow all of a sudden say if something pulls back by over 20%, that everything's gone to heck in a handbasket out there. That's just to Steve-O's way of thinking, that's just simply insane. So watch that island bottom inside of Flowtech. How about to the downside? You've got Activision, Blizzard, ATVI. Closed at $51. Trading right now at $46. So what is this doing? Is this going to test its lows or blow out its lows out here? Well, the lows inside of ATVI, the lows I'm referring to, most recent lows, took place back on the trading day of December 26. That was $43. We're trading at 46, so it's not down there yet. So this is retesting its lows. The high of that session was 47.06. If we put this on a weekly time frame, just for the heck of it, let's go take a look at this chart out here. What was this thing doing? So when this was pulling back, as it's been pulling back, it's been pulling right back into a breakout area. That breakout area inside of Activision was between the price point of $38.93 and $47.64. Now the volume, and the reason why we know that's a breakout, twofold, threefold. One, because you have the art of timing the trade. And you know, on that book, you know how Tom loves to say, I know if I'm going to say it right now, I have to give him $1. Wide price spread, accelerated volume. Well, on a weekly basis, ATVI had wide price spread, accelerated volume. I know that's $2 that I owe him. That was on the trading week of February 6, 2017. Boy, no surprise there. So prices pulled in or pulled back to that level. That was with 97 million shares. And as price was pulling back there, it was doing it with, well, it was doing 90 million shares the week of December 3rd. So that was really bad news. So what you've got here is it's just flirting around in this area. What Activision Blizzard needs to do, it certainly needs to do, this is a weekly chart, at the end of today is close back above or stay above 47.64. 47.64. If it closes back below that, well, it opens up the possibility of getting all the way back to the breakout, which would be $38.93 out there. ATVI is the ticker symbol there. Also moving to the downside, you've got Procter & Gamble. You got Apple. Let's go take a look at Apple. Apple closed at 153. It's not that big of a move to the downside, so maybe we shouldn't look at it. It's 152.82, so no big mover and shaker there. Let's try PG&E Corp. PG&E, 1776 is trading at 1640 right now. This is the weekly time frame chart. Obviously, this thing looks horrible, mostly because of I suppose the fires out here. It's low. This is a weekly time frame we're looking at. It takes you back to 2001. And that is in the 650-ish type area out here. It's trading. Let me just pull it this way so we can take a look at that swing point out here. You know, where PG&E could easily be headed to is the 650 to 895 level. Currently trading right now in the pre-market, $16. Steve Rhodes with TFNN. Probably not best to buy PG&E. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Thanks for listening. If you're catching the show between about 1:54, this is the recorded version. We did the show live this morning between 8 and 9. It's now 8:54 in the morning. So to finish things off, let's take a look at the Dow. Let's look at the cash indice out here. And I'm going to give you some areas to be watching during the day. So as you come into the close out here, and the first thing that I'm doing is just a simple trend line. Simple trend line that has been broken. It was broken. It was retested yesterday. And as long as price stays above that, we're looking at the Dow. And what I'm doing is taking a look at the low of October 29th. That low, by the way, here, let me give you the exact number on that. That low is 24,122 and change. And then on the December 10th level, it is at 23,881. So that would say today, I'm going to guess that this trend line is priced at about 23,690, give or take. If the Dow closes the day above 23,690, then what's unfolding here is an A to B equals CD pattern to the upside. If we take a look at it, we're going to start with our low from December 26th. We're going to come to this high out here on the trading day of January 2nd, a one-day retracement on January 3rd, and the one-to-one price point objective of this pattern takes you to 24,339. The 1-to-1.2 takes you to 24,802. Now, the way that the Dow completed in its pattern out here, it made an A to B equals CD to the downside. If we take a look at it, we go back to the high on the trading day of October 3rd. We then come back. Remember, we use that trend line of October 29th. That's your B point. Your C point out here is a trading day of November 8th. This made a 1-to-1.618 A to B equals CD perfectly. And if you own The Art of Timing the Trade, not that I'm pushing that book out here, you know when you do a 1-to-1.618 A to B equals CD, you typically do something else. Well, what's unfolding right now is that something else. And that something else is an A to B equals CD to the upside. That is the good old Gertley sell pattern that is likely setting up. And that's a perfect intro to the individual that taught me that pattern. Larry Pesavento. That's if you're listening between 8 and 9. If you're listening between 1 and 2, then stay tuned for my favorite polar bear, David White. Regardless, have a terrific weekend. We'll see you back here on Magnificent and Marvelous Monday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.